Alright guys, welcome back to the channel. In this video, I want you to take a look at a couple of charts, the Aussie CAD and the Aussie dollar. And looking at these, you might think that they look very, very similar, but I want to go through the fundamental differences between them and why most traders end up struggling or failing or end up breaking even at best, whereas consistently profitable traders are able to capitalize by seeing the fundamental differences in these two opportunities. And by the end of this video, you're going to understand what a high quality trade is and what a low quality trade is and what separates the consistently profitable traders from those who really struggle for years and years and years and end up blowing their account. So let's get stuck in. So first of all, the Aussie CAD at a glance, you might think, well, yep, that's the Australian dollar against the Canadian dollar. And yes, we've got the Australian dollar against the US dollar, and they look very similar. The daily chart looks like it's got a very similar pattern. The 4-hour chart looks like it's got a similar pattern. The hourly chart looks like it's got a similar pattern. And you might think, well, look, if I'm going to place a trade on one, I might as well place a trade on the other because they look very similar, and the chances are they're going to be correlated and they're going to produce the same, they're going to do the same move or have the same moves or behave the same way, and I'm going to be able to profit on both of them. But that's not true. Let's take a close look at the markets so that we can drill down and see what the high probabilities are on both of them and the differences between the two, which will keep you on the higher probability side of the market. A real decent trader, a professional trader, will constantly ask themselves, why should I avoid taking this trade? And that's what separates those traders from the rookie traders, because the rookie traders are asking themselves, how can I get involved with the trade? Why should I get involved with the trade? And the professional traders are asking themselves, why should I avoid this trade? And they're building up a confidence by building confirmation and confluence and identifying key areas and points and scoring systems that allow them to enter ever degrees of higher quality trades, whereas the rookie trader is just looking for every opportunity. And the professional trader has a discipline to say, actually, this doesn't quite meet my criteria. So let's just dive into the Aussie CAD, and I'm going to go into the Aussie CAD first, and then I'm going to go into the Aussie dollar, and I want you to really take note on the differences between how these two are behaving and where that difference lies, so that you can remain on the high probability side of the market. So first of all, let's look at the Aussie CAD in a bit more detail. Now, we're looking essentially, yes, we're in a bull run at the moment, but what I'm looking at specifically here is when this is likely to see some relief, when we're likely to see a rollover. So we're looking at a structure-based short. We're looking at counter opportunities here. And the Aussie CAD, first of all, whenever we look for these counter opportunities, we're looking for a couple of things. One is where it's likely to roll over. So we do that by either looking left, or first of all looking left, so we can look at where we're likely to roll over. On this market, I'm instantly attracted to that $1 flat level. $1 flat level is a psychological number. Now, if you're familiar with the markets, the great thing about trading is this chart represents all of the market participants' behavior. So it's all psychology, it's all human psychology. And if we've got a graphical representation of that psychology, we can identify patterns that happen frequently in the market, and then we can build rules around them so that we can capitalize on a move that happens over and over and over again. Why do I like the $1 flat level? Why does market psychology produce patterns? Who cares? Right? That's not important. I bet when you've been in the gas station or filling up your car, I guarantee that you try and stop the pump on a even handle number, or a dollar flat, or a £1 flat, or whatever it might be. I bet you do that. Even if you're not paying by cash and you're not worried about change, even if you're paying by card, I bet you still do that. Why do you do it? Who cares? You don't know. You probably don't know. But the same thing happens time and time again in the markets. So we're approaching a $1 flat level, which is a psychological even handle number. And if we look left, you're going to see that time and time again, whenever that level is tested, it's respected more often than not. And you can scroll back and you can find resistance, support, support, resistance, resistance. And you can see that each time that level's tested, it's respected more often than it's not. And there's a reaction there. The next thing I look at is the strong bull run. okay? Because the stronger the bullish run beforehand, the better. Because we know that strong bull runs, right, the bulls take the stairs, the bears jump out the window. We know that these bull runs don't last forever, and the stronger they are, we know that they're likely to hit a wall, and also it's more obvious to see that deceleration. It's more obvious to see that that exhaustion in the market when we have that strong bull run. So one, if we're looking for a strong bull run and we're looking for obvious signs of deceleration, two, we've got a level of structure, three, we've got a $1 flat level, all right? All the stars are starting to align. Once we've got that prediction, we can start dropping down to the trading time frame, and immediately on the 4 hour here, you can see that we've got this really nice ascending channel. We've got an ascending channel here on the 4 hour, which also plays into our analysis that we're likely to see a rollover, which we actually did roll over. If you trade ascending channels, you obviously caught that move, just this move here. But RSI's gone overbought. We've got divergence as we've put in a retest now. So we've actually got a double top as well, where we had equal tests of the highs, right? Equal tests of the highs. Divergence, there was about an error of about 23 on divergence on the RSI from 88 down to 65 or 63, and equal test of the highs. Really tight double top, got a great double top there, which indicates more confirmation that we're likely to see a rollover at that level. So we've tested a dollar flat even. We've hit structure looking left, resistance looking left. We've got a strong bull run that's showing signs of deceleration with an ascending channel. We've got a double top, right? That is a great indication of a high probability short. And if we're looking to short this, we can get a great reward to risk profile at structure. So we'd be looking at entering on the double top, and then we'd be looking at getting a tight stop ATR above the high of the double top, which give us about a 2.5, 3 to 1 reward to risk. Great setup. Now let's take a look at the Aussie dollar, because before I flick to the Aussie dollar, I'd want you to just glance at this market again, okay? And now we'll go to the Aussie dollar and look how similar they look. Bang. Almost identical to the uninitiated trader, to the trader that is rookie, a new trader that thinks, well, yeah, I've done my work on the Aussie CAD, that looks like a good trade. Aussie dollar looks the same, I'll just place the same trade. And we see this all the time. And what happens is they end up making money on the Aussie CAD, but giving the money back on the Aussie dollar because it's a low quality trade. And I want to explain to you exactly why this is a low quality trade on the Aussie dollar. So first of all, yes, we've got the bull run. Okay. Now, where's the bull run likely to finish? Not here, because if we look up here, we've got a 0.8 flat level, which is the next psychological number. Okay. So 0.8 flat, which is up here. If we look left, 0.8 flat's going to be the higher level of resistance, which will be more attractive. You can see here that we've tested it here, but we've got that level up here of 0.8, which is a highly respected level in this market. So the next thing we want to do is go, well, yes, we've got a bull run. Yeah, we're seeing some slowing down at the moment, some loss of momentum, but is it a high probability rollover zone? No. Okay, now let's also look at the trading time frame. One, we didn't have the ascending channel, but two, yes, we've got a retest, but it's not a valid retest. It's not a valid double top. It's actually a higher high, higher close. So we didn't have equal tests of the high. We actually violated the initial test high, which was here. And on the second test, we put in a higher high. So that's not a double top. That's actually a higher high, higher close. And on the divergence on the RSI, it's not as strong, the divergence. But either way, we wouldn't be looking at this as a retest anyway, because it isn't a double top. So looking at it from, just as a rookie, looking at it from an uninitiated trader standpoint, yes, it looks similar. But if you took both trades on this, what would happen is, if you took this over time, the Aussie CAD type of trades might yield profits. You might have a 62, 65% strike rate on that. But with these trades, if you're taking these trades, these have a very low probability, and these is where you're going to be giving the profits back. And if you don't understand, or you're not journaling or tracking what you're doing, this is what we call death by 1,000 cuts. This is where you just don't understand why you're not earning money in the profit in the markets overall? Why you're not consistently generating a profit long term? And it's because of this kind of approach. You want to be on the right side of the market. Now, I can tell you, just looking at this, there are tons of opportunities like this in the market this week. We've got the pound dollar. Pound dollar's approaching this level alert up here, which I've got on this chart here, which is up at 142.60. Another great opportunity there. Whoops. We've got also on the New Zealand dollar, we're approaching about a 40 pip zone up here at 73.90 up to 74.30s. That 40 pip zone is where I'm going to be looking for another indication that we're likely to roll over, and then look for entry signals, then get involved in a short there potentially. We've also got the pound yen, which is a very similar situation as well, where we're already in this trade. So my point is this: if you can put in the work and learn price, learn to read price, and understand that you've got to put in a bit of work to go and get some confidence due to testing some of these setups, there is never a shortage of opportunities in the market, okay? But what you don't want to do is get excited, go into the markets because you've got a little bit of knowledge, you're armed with a little bit of knowledge, and you've got this kind of Dunning-Kruger effect going on where you think you know too much. You're going to get burnt. You're going to give your money back over time if you don't spot the fundamental differences between the two. This is what we see. This is the most common reason for traders struggling and giving their money back to the markets, or giving it back to those who can be bothered to go and figure out the differences between these two setups. So this is just one example. This is happening on a day-to-day basis on hundreds of thousands of different opportunities in the market. Don't be one of those people who gets burned. Be one of those who can identify the high probability setups and executes a trade plan flawlessly time and time again every time you approach the market. So I hope you found value in that. Please share it with someone who's been struggling to trade. If you know someone who's trading, who's struggling, who's breaking even, or has been dilly-dallying around for years and years and still hasn't got the results they want, please share this video with them. Also, give it a like and let me know in the comments what you think about this, how your approach to trading is, or some of the things that you've learned to build that discretion and add to your arsenal to develop higher quality trade setups and identify higher quality trade setups. I'd love to read those comments, and it'll also be valuable for all of the other subscribers to this channel. So thanks for watching, and I'll see you in the next one.